By consolidating liquidity to service international payments from many disjointed international Nostro accounts into one XRP pool, respondent banks allocate less total liquidity to service the same volume of global payments, so essentially using liquidity in a much more efficient way. And just like HMX says, the rails are here. What's going on, guys? Kevin Cage here with another crypto update. Hope everyone's doing well. In today's video, we'll try to keep this short and sweet, just going over the newly launched XRP Ledger automated market maker AMM. This will really just be a high-level introduction, different platforms, and how to essentially access the automated market maker and how to use it, high-level risks of impermanent loss, understanding liquidity provisioning, these different types of liquidity pools that anybody can create on the XRP Ledger, and it's just super important to understand the risks of providing liquidity, understanding impermanent loss. And there can absolutely be a lot of reward for people that are potentially early in a liquidity pool that have a good percentage of the pool. If certain tokens are actually trending together and both going up higher together, the pool's value is going to increase. Different types of opportunity, but it's also important to understand that if it's an XRP USDC pair and XRP just skyrockets, you may have been just better off holding your XRP. So I see the AMM as a great thing for the XRPL to bring a lot more liquidity. I'm excited to track how some of these pools grow and how much liquidity is actually brought to XRP over the coming months as this matures. So I may do a much more professional and detailed video going over different examples, but because the AMM has just launched, this is just going to be a high-level introduction. So I'm really happy the AMM is officially live. I know many people thought it would never happen. We were waiting for the actual votes to go through and be approved, and we finally got it, which is great. And to be clear, I'm not trying to FUD the AMM or providing liquidity on any chain. Every single chain is a little different in terms of how they structure it, with their fee structure, things like that, and I really like the XRP Ledger because how efficient it is. In some cases, there are different types of liquidity pools. We can see some different types of pools right here on the XRPL. So we have USDC XRP, USD XRP, we have Flare XRP, we have Core XRP. If somebody puts in $500 of USDC and $500 of XRP, they're actually going to get these LP tokens. So the LP tokens can absolutely go up in value. So we can see this USDC XRP pair right now has $238,000 in liquidity. So when people are providing liquidity to any of these pools, we can see the liquidity right there. That would go up and you would also get your percentage of this overall pool. And we can see, I believe, the price of each of these LP tokens are individual pairs in these liquidity pools. So we can see they're priced in XRP. So for example, with USDC XRP, when you're depositing two equal amounts of USDC and XRP, when these tokens are added to the pool, you're technically no longer holding that same amount of XRP and USDC. It'll be added to the pool, and in exchange, you'll get your LP tokens, which is essentially the token combined of this pair, usually split 50-50. So let's say that somebody deposited a total of $1,000 into this liquidity pool, $500 of USDC and $500 of XRP. So $1,000 position and your LP tokens. So right now, at the point of deposit, you have around $1,000 in LP tokens. So you're providing your liquidity to the automated market maker. Anybody that needs liquidity or sees an arbitrage opportunity can use that liquidity for trades. So every single transaction, trade, or swap using this liquidity, there's going to be a transaction fee, and some of that fee goes right to this liquidity, increasing the value. So there are different ways the liquidity and the price of the LP token can go up, but there's also risks of that being dropped if somebody or a large whale removed a bunch of liquidity. So there's pros and cons. We'll run through the docs and see if there are any clear differences in terms of fee structure or features of the XRP Ledger AMM versus other chains. I'm still learning and reading a bunch again about the XRPL AMM. I originally read a bunch about it, fully understood it, and I'm just kind of refreshing myself. I do actively have LP tokens on other chains, so I just want to see if there's any clear differences. So there's a variety of different XRPL pools right now. You can even see on XRP Scan a variety of pool tokens right here. You can see LP token, and their balances. And anybody can create a liquidity pool on the XRP Ledger with any pair. And friendly reminder, none of this is financial advice. I'm not endorsing or telling anybody to buy any of these pairs we're discussing. These are just examples. But right here we have a Bitcoin XRP liquidity pool. We can see the liquidity around $23,000, almost $24,000. So if somebody came in relatively early, got 1%, or let's just say 5% of the entire pool, and later more people or even whales added a bunch of liquidity and the liquidity increased 5 or 10x, so would the value of your LP tokens. So in this liquidity pool, we can see 50% in Bitcoin, 0.18 BTC, and 19,000 XRP, so it's split at 50-50. So by depositing both Bitcoin and XRP into the pool, you're helping facilitate trading between these two assets. And when you're doing this, you become an LP or a liquidity provider, and by doing this, you can earn a portion of the trading fees that are generated through the pool. So by adding liquidity to these pools, you're helping the pool become more efficient and have a lot more depth, helping everybody in the ecosystem trade between these pool tokens or whatever the pair is, whether it's between Bitcoin and XRP or any other pool, and you're potentially earning rewards for your contribution. So when you have LP tokens, how can you actually make money? You can make money when the asset value actually appreciates. So for example, if the value of Bitcoin and XRP both increase significantly, the value of that liquidity pool and the value of those LP tokens would go up. And other ways to make money include your earnings from trading fees. So as a liquidity provider with LP tokens, you're going to be earning a portion of the trading fees. So if you saw a large increase in trading volume for any of these pools, such as the Bitcoin XRP pool, so if there are higher levels of trading volume, tons of transactions, that means there's going to be a lot more fees that are collected by the pool. The more fees collected increases the value of the LP tokens. So that's trading fees, and then we also talked about asset value appreciation. So if Bitcoin's price doubled or went to, say, $130,000, and XRP went to $1.25, that means that the total pool value nearly doubles. So the value of the LP share could also approach a 2x. Now this is just a basic example, this isn't even considering impermanent loss and other factors. And it also doesn't consider the exact mechanism of the fee distribution, but just a basic example. And there are so many factors to consider, and I heard this the other day, so this is one of my new phrases. Like most answers in finance, it depends. There are a variety of factors when you're being a liquidity provider. There are situations where you can make a lot of money. There are other situations where it might just be trending sideways, not much trading activity, and you may be better off holding the tokens themselves. It also depends on the price action or the deviation of the two tokens in that liquidity pool. If one is going up and one is going down, if they're both going up, if one is going up at a higher rate of return, etc. And when providing liquidity, we don't necessarily need the assets to actually appreciate in price. Of course, it'd be nice to see Bitcoin go up 2x, XRP do a strong 5x, things like that. But if there is just an increase in trading volume and the liquidity pool grows from fees, the LP tokens and the liquidity pool's value can increase without other assets having to absolutely explode. It just requires collecting a lot of fees from higher levels of trading activity. Or it just takes one whale to add hundreds of thousands of dollars or more in liquidity to any of these pools, getting a huge chunk of the LP percentage share, and this would also increase the pool's value dramatically. And that's the same concept for demand of any whales buying a bunch of Bitcoin, Ethereum, XRP, USDC. And there have been times in the past where I own a certain portion of the pool, a whale comes in, they actually increase the value of the pool a lot, but because of the differences in trading activities and the differences between, instead of a 50% rate or an even split between assets, this might change, my percentage of the pool or the ownership percentage changes too. So there are situations where it could work out in your favor, and there are other situations where it might not. So you're playing the game of being a liquidity provider. During periods of high transaction volume, it can work out very well. So this website is xpmarket.com. You can click the AMM and access all types of features. You can click add to look at different liquidity pairs. There are a variety of platforms right now in the XRPL ecosystem that do this. This is just a quick example. And another quick example of being a liquidity provider and making a 3x return. Say you're actually using the USDC XRP liquidity pool. Say you provide $1,000 in USDC and $1,000 in XRP. So your total investment is $2,000 added to the value of this liquidity pool. Let's say XRP starts getting some price action, it starts moving, there's better trading volume, and the pool is just accumulating a bunch of fees from all the trading activity. So XRP's price goes up, here's how much XRP there is. If XRP's price goes up substantially, the value of the pool goes up. If there's more trading activity and excitement at this time, the price of the pool also goes up from getting or collecting these fees. So let's say the value of the pool is now up 3 times higher than when you first entered the liquidity pool with your LP tokens, assuming that you still own a similar percentage of the share. So now your LP tokens started off being valued at $2,000 and now they're worth $6,000. So that's a basic example of profit, and then let's talk about impermanent loss. Let's do the same thing. We put $1,000 of USDC and $1,000 of XRP into this liquidity pool. And out of nowhere, XRP goes right to $5. So instead, if you were just holding your XRP, you were not putting it into the AMM to provide liquidity, and XRP went to $5, you're almost making an 8x return. However, as the price of XRP increases, there's going to be arbitrage traders that will add USDC to the pool. Because in this example, XRP went to $5 and there's much more XRP in this pool than USDC. So when XRP goes up in price, the value of the XRP in the pool is a lot higher than 50%. Because of this, arbitrage traders are going to be adding USDC to the pool to get this percentage closer to 50 and potentially removing XRP from this pool to lower this to 50, to try to get both of these percentages to reach equilibrium at 50% each. Now this rebalancing of arbitrage traders and these actions maintains the pool's value, but it's going to be changing the LP's asset composition. And this is just a basic example of impermanent loss. So the pool's value did increase to the price rise, but because the increase in the liquidity pool's value is less than the actual increase they would have realized by just simply holding XRP and USD separately outside of the AMM. So the exact amount of impermanent loss in quotes depends on the final asset ratio in the pool, but it generally increases with larger price disparities, such as huge differences in the price action of XRP and USDC. If XRP went up 8x and USDC is a stablecoin, so it stays relatively stable, that's a big price disparity. However, impermanent loss is impermanent. It's not permanent unless you actually sell and then realize it. So it is just temporary until you actually remove the liquidity from the LP tokens. So they're never locked. You can remove liquidity, add liquidity 24/7. So some liquidity providers may just hold their LP tokens regardless until they're in a nice profit. If they see a big opportunity where they can get a big win or improve their position in XRP or Bitcoin or any other asset, then they can remove some liquidity. It's really case by case and up to each person. Alright, hopefully I didn't lose anybody there. I know the majority of people that have been liquidity providers before on other chains or Ethereum are familiar with this concept, but I just wanted to high level go through it as best I could, just whipping this video out to help anybody brand new to better understand what it means to be a liquidity provider, specifically on XRP, or the XRP ledger. So for anybody interested in becoming a liquidity provider, you want to learn more, I think it's important to have the ability to test this out with fake money. So I retweeted this by Anidos or Anidos, I don't know how to pronounce this, I just know this is the company by Panos, who's been a diehard XRP community member, very smart guy, so I just wanted to share this. They are live with the AMM, but the cool thing is you can actually test on DevNet and you can test, practice, and play with the XRP ledger AMM with fake money just to get familiar with it. You can check out the team. I know everybody in the XRPL community knows Panos. And then you can click Access Apps. We have right here the swap feature, so we can click Launch. And right from here, I can click Login, and then I can connect any of my wallets, whether it's Gem Wallet, Zaman, or Crossmark. And up here next to Trade, we can see Liquidity. And then we can see different liquidity pools here. Bitcoin XRP, XRP Ethereum, XRP USDC, Solo, CSC, and USDT. And I assume the process is the same on other platforms, so on xpmarket.com you can come up over here to click AMM, you can then connect your wallet in the top right. So they've shared a bunch of different information, they have a Discord if you guys have any questions. And the most important thing is just familiarize yourself with the documentation. There's a lot more or updated documentation shared right by RippleX. I'm not going to bore anybody with all the details, I'm sure you guys have seen this, I also retweeted it. What we do have though is single-sided liquidity provision. So this allows users to provide liquidity with only one single asset instead of having to do two. So if you put $100 of any asset, let's just say it's USD or USDC, the AMM is actually going to convert it and split it 50-50. So $50 into XRP and $50 into whatever that asset is. Liquidity is aggregated at the protocol layer rather than fragmented across numerous applications and duplicated liquidity pools. And there's plenty of documentation shared by RippleX. Here's David Schwartz posting this. So explaining all the core features of the AMM on top of the XRP ledger versus other networks. We have Roth Economan sharing these memes, I always love these. So AMM token swapping, one-sided LP deposits, two-sided LP deposits, buying LP tokens on the XRPL DEX. We have Crippen sharing an awesome thread, just a word of caution, definitely a must read, and friendly reminder, there's no lockup period with the XRP ledger AMM. Your deposited coins are provided to the AMM robot, which may then offer markets to any trader at any time for the current price determined by the algorithm. We have Neil right here, Senior Staff Software Engineer at Ripple. In his bio he says working on ODL, but I know that Ripple rebranded and just calls it Ripple Payments. Just giving a warning, and David Schwartz did as well, be very cautious with single-sided deposits into the AMM when they don't have a lot of assets yet. This 2,000 XRP deposit caused the rate on the pool to get heavily skewed, allowing somebody to arbitrage the pool by swapping $80 for 1,869 XRP. Some people could make some big mistakes, and arbitrage traders are going to try to profit off that. And David Schwartz, Ripple CTO, also shares the warning about single-sided deposits. So remember, the AMM is officially live. This is still new. There may be bugs on different platforms. We do have to be patient, but overall, this is a great thing to enable a lot more liquidity to get to the XRP ledger. Thanks so much for watching, guys, and huge thank you to all that hit the like button. Let me know your thoughts down below and share this around. If I made any mistakes in this video or said anything inaccurate, feel free to correct me down below. I'll be doing some updated videos in the future. Have a great weekend, guys. If you enjoyed this video, I'd greatly appreciate if you could hit the like button, let me know your thoughts down below, and my link tree is linked in the top of this YouTube video description, with all links, crypto resources, and discounts. I'll catch you in the next one.